Let's see what happens.
Facebook a go.
It's all yours.
All right, good afternoon on this wonderful Monday morning in October, on Columbus Day. We are here with Kim Stone from Rocket Mortgage. Welcome all of our RRC New England region members and those out in the real estate world. Greg is our president-elect, and he's going to be president of our RRC region next year. So we're excited for that. My name is Michelle Hagstrom and want to introduce our team. Our 2025 leadership team. We have Marie Presti on the line currently. Hi, Marie.
Hi.
For our team, Fran Bixler is our regional VP, and we've got our communications folks, Courtney and Darlene. Education, Quincy, with the help of Cherie, and Cherie is also our Rhode Island Network Director. Christine is our finance chair, as well as Ryan is our finance vice chair. And we have Christina and Caitlin for membership, Rachel and Nora on special events and sponsorship. Jamie and Joanna are our Massachusetts network directors. Vicky and Brenda are our main directors. Connecticut is Yolanda and New Hampshire is Ashley. So thanks as always, everyone, for being part of the leadership team. We appreciate you. For our 2025 strategic partners, our platinum partner is Annie Mack. And Todd Cook is in charge of their team, and he's got a great team that support us. For gold sponsors or strategic partners, we've got Nicole from Coast to Coast, and Gaffney Law is one of the attorneys we work with. Cross Country Mortgage, we've got Donna Brady, and Leader Bank is Dave Conti. For MLS PIN, they support us all the time, whether it's at events or conferences or whatever we need. They're there to help us out. John Gallagher from Clark Hill Inspections is one of our inspectors that helps us get through all those inspections. And we've got some new laws relating to inspections in Massachusetts as of the 15th. So that's only a couple days away. Kim Stone, again, is with Rocket Mortgage. He's with us today. We've got Joe from Statera Law. GBAR, which is the Greater Boston Association of Realtors. They are always there to help us out. And we've got Paul Romano from Skyburst supporting all of our financial planner needs. So thanks again for our strategic partners. There's a lot of events and different benefits that we wouldn't have without them. So we appreciate our strategic partners as well. This coming Wednesday, there's going to be a broker summit, success summit down in Norwood, Massachusetts. And we're going to be hosting a cocktail hour after that. It's actually a couple hours because we can't just do 1 hour. So 4:30 to 6:30, we've got an event happening at One Bistro. So we'd love it if you could come by and say hi and have a cocktail with us.
So Michelle, even if you're not going to the broker summit, you can still go if you're an RRC member, right?
Yep. We'd love it for you to be there either way. On October 21st, it's an all-day virtual event. We've got our divorce certification training course that's going to be held and instructed by Addie Owens. So we're looking forward to getting a little bit more educated on dealing with divorce situations, communication skills that go along with that, using basic family law, although we're not attorneys. So we're just going to make sure that we point that out to everybody, but it's really trying to get the parties involved through the process so we can help them with all their conflicts and get to, the closing table and support whatever people need for their situation. We're also doing a blood drive currently. So there is a code that when you go on to the RRC website or the RRC Facebook page for our region that you can get credit for donating blood on the RRC region's behalf. And if we look at the next slide, there's Greg giving blood. So you too can lie there and let them take your blood for a great cause. I was very excited about that photo.
And the
Uh,
blood, you go to your local blood drive, right? Where you don't have to
Yes.
go to Greg's blood drive, go to any
Yeah.
local place and you still get counted, correct?
Yeah, and we're just trying to, between the 6 states, if we can have, obviously designees, members, and even friends and family give, if we can hit a goal of 100, that's my goal. We're way below that right now. And you just pledge through the Sleeves Up campaign. And then you just find a drive locally so you can do it wherever you want.
Yep. So contribute blood like Greg.
And my wife gave already.
Yeah. It's fantastic because there's definitely a need out there. So
Yeah. We don't want your money. We want your blood.
the upcoming events that in November, we've got the NAR, which is the National Association of Realtors Conference, and CRS is going to have a few days ahead of that. And right before the welcome reception for RRC, we're going to be doing a happy hour on November 12th. So if you're heading off to Houston with us, be sure to stop by for that. We'll be sending out a couple of notifications too, so that you're aware of when and where that's happening. And then on December 4th, we'll be having our holiday luncheon and installation for the 2026 team, where Greg is going to be installed as president. So we're looking forward to that. And that's going to be in Connecticut. So now I'd like to introduce Kim Stone. She has been a loan officer for 25 years or so, so she has tons of experience. She's done a lot with our realtor group and supporting us as a strategic partner, and just has a wealth of knowledge. She is also involved in For One Child Foundation. She's worked at and been an ambassador for the Wachusett Mountain Ski Area for years. So whether you're looking for someone that needs help with their home buyers, investors, if they're looking to refinance, Kim is considered by many of her clients their loan officer for life. So she's always has a wealth of knowledge. If you need anything, have any questions, please reach out to her. But right now she's going to talk about buy downs, whether it's on the seller side, the buyer side, and what some of the benefits are involved. So Kim, do you have your own slides or do you want me to share?
Oh, you're on mute there, Kim.
Thank you, Greg. Whatever's easiest, Michelle, I do have them up. But if you wanted to share them and then I can, I think if you go back one, I can just cue the next slide. There's, for the sake of time, this is going to be kind of a little bit of a Cliff Notes version, but we'll cover the important topics. So thank you for having me. It's my pleasure to be here, and it's nice to see the leadership team here as well. I'm Kim, and I've been a loan officer for 25 years. I was promoted to a purchase specialist back in 2002 at the company I was with, and I've never looked back. So purchases are really my main focus. Buy downs is the topic today. And so I wanted to include buy downs for both buyers and sellers. I think we are in a market right now that the word that I've heard used quite a few times is wonky. So I think the market is kind of waffling a little bit back and forth. So there are some properties that are sitting. At the same time, we still have multiple offers on properties. So I thought buy downs would be very relevant to help out both buyers and sellers in this market. So to start with, focusing on the buyers, if you want to go to the next slide. There are a couple of buy down options if you're a buyer. There we go. So you've heard of the permanent buy down, and a few years ago, the temporary buy downs started quite a bit as well. So just to outline, starting with the temporary buy downs, funds can be contributed from any party other than the buyer. So when you're doing a temporary buy down where you're looking to pay for some of the payment up front on a buyer, to take care of the first through the third year of their payments. That's why it's temporary, because it's either 1, 2, or 3 years for that buyer. And the funds can come from any party to the transaction other than the buyer for that. The funds are basically used in those buy downs to subsidize that mortgage payment for the 1, 2, or 3 years. And the percentage or the amount of money that is applied is the difference between a 3%, 2%, and 1% in their interest rate. And if it's an extended buy down, 3, 2, 1, it multiplies over the years. So on a 3-year buy down, for example, you would be covering enough interest in that payment for a 3% reduction the first year, a 2% reduction the second year, and a 1% reduction that third year. Conversely, if you did a 1-year buy down, it's 1% of the interest rate for 1 year. And that is probably the most common that we see, is the 1-year buy down. It's something that becomes more affordable, and it can make that difference for a buyer who's going from a rent situation or maybe even a no housing payment situation into a mortgage. It gives them a nice year to kind of ease into that full mortgage payment. The beauty of all the buy downs is they are still conventional or conforming 30-year fixed. They do also work on the government loans, FHA, VA, and USDA. So they can be applied to all of your conforming loan products. And in some circumstances, case by case, possibly the jumbos, but primarily we do see them on the conventional, conforming, and the government side. The real savings is upfront over the course of that first, second, or third year. The second is your permanent buy down, and that is when money can be applied upfront towards the closing costs to buy a lower interest rate for that buyer, and it's permanent. The rate on that loan program is now set at a lower rate because a small amount of interest has been paid upfront, and in return, the money that they're borrowing on that mortgage is going to be repaid at a lower interest rate because that interest was paid upfront. In a permanent buy down, anyone can contribute to the permanent buy down, including the buyer. So if they did want to buy that permanent rate down, they can contribute to that. The savings is recuperated on that loan over a longer period of time. So they might not see as much of a reduction that first year, but the longer that they stay in that loan, the longer they're going to see the savings on that loan. And then one difference between the two is on your temporary buy down. These apply to fixed rate mortgages alone, and on the permanent buy down, that can be applied to both fixed and ARMs. And if there is some excess out there, you can actually combine the two, where you have both a temporary buy down and a permanent buy down with the interest up front. And we are actually, being with Rocket, we are actually running a promotion right now where we're providing a lender paid 1-year buy down for all of our conventional, conforming, and government. And so there's no income caps or county limits on that promotion. It's for all clients in that price range. And then the next slide, I didn't know if we'd have time for questions. So is there a slide in between there? No, okay. So if you want to go back one more. Perfect. So what I put here was an example of the first year temporary buy down. So on the left, scenario 1, and I chose just an average price range, Middlesex County. That's one of our biggest counties. So a $700,000 or $699 listing price. So on the loan today, and it's funny because Greg and I were talking earlier about what we're expecting to see for interest rates, and this was pretty in line with what we were talking about. So on a $700,000 loan, if somebody were to get just their traditional conforming loan at a 6.375, this is what their mortgage would look like right out of the gate. When you apply a buy down to that loan, they're still getting a 30-year fixed interest rate. So one of the questions that I get, or one of the things that does come up, is people say, well, I don't want an ARM. It's not an ARM. It's still your conventional or conforming or government loan at a 30-year fixed rate. They're just getting a reduction in that payment for the first year. It's still a 30-year fixed. So on a loan like this, if the rate were to go from a 6.375 to a 5.375 each month, that client is going to save over $400 in their monthly payment for the first 12 payments of their mortgage. And of course, as we all know, they skip that first month. So they actually have 13 months in that savings. And then on the 13th payment, that's when the payment would then go to the full payment that you're seeing on the left. A lot of people are opting for this because they believe that the rates are going to go down in the near future, and it allows them to see real savings in their payment that first year. On a loan like this would save somebody $4,830 their first year in the mortgage. The other thing that's really nice about all of these is they don't then assign a prepayment penalty. So if rates did go down, say 6 or 8 months from now, there's a turn and the rates do go down, they can still refinance into a lower interest rate on a new loan, and they don't have to repay any of the buy down that they used those first few months. I don't know if we're opening up for questions.
We will be at the end.
Yeah,
Okay.
Kim, actually, while you're on this slide, I did have one question.
Okay.
So right now you said Rocket's got a promotion for the one year buy down.
Yes.
Would this be an example of it?
This would be an example. Yes. I just grabbed some market rates, if you will. So the rate here was your basic single family. And with this one, I did 10% down so that you could see what a payment would look like with 10% down versus, say, a 3 or 5% down all the way to 20% down. This one's kind of right in the middle, but yes, this would be an example of what you would see.
And at the top right, we see the 4,800 in savings. What's the typical cost for something like this, a 1 year buy down?
So if you were to do a 1 year buy down, and if this were the scenario that you were looking at, this would be the cost of the buy down. So, and this would actually, nice segue, Greg, into the seller side of it. If you have a property that, may need a little bit more attention, or you're looking to get some traction on a listing side of it, a seller, and Michelle, if you want to jump to the next slide, a seller, if you have a property that's out there that maybe been there for a little bit, a seller could offer something like this to a buyer, and it would be much less than, in many cases, if they needed to get that price below one of those thresholds that might pick up more buyers. So to segue into this one, on a permanent buy down, oops, I'm sorry, the next slide, Michelle, I'm so sorry. On a property for a listing, if you have a listing, no, that was the right one. The next one. Yep. If you have a listing that might be sitting for a little bit, the average, according to the internet and some data from all of our organizations, the average price reduction on a property varies from 3 to 5%. So on the low end, it would be a 3% reduction to get some traction on a listing. This is an example of if you were to take a price reduction on a listing at $699 at 3%, which is the minimum, that's going to be a $20,000 reduction. So that's a real reduction in the seller's net proceeds on something like that. Whereas as a seller, if you were to offer someone either a permanent or a temporary buy down, the cost to the seller is actually quite a bit less than having to face a price reduction to capture another market. You could also do a combination if you need to get to a certain threshold. So for example, if this sample was listed at say 705, you might get under that 700 by dropping the price by $5,000 and giving a 1-year buy down. You're still only at a $10,000 difference in your net proceeds to the seller versus a standard average reduction, which would be a $21,000 hit in this price range if you did the average price reduction. So jumped ahead a little bit to the seller, but I think it was relevant given your question.
Yeah, no, that's great because the math is easy. They cover the delta, the difference between the regular payment and the buy down. So
Mhm.
that math is, simple. And
Mhm.
it does make sense that it's less than doing a market price reduction. It's a true benefit for the buyer.
Yep, it's a benefit. It can bring more buyers. And for buyers who may not have thought that that price range was attainable, it gives them a year to work up to that payment. I mean, that's a significant reduction in a payment. If you wanted to see a difference in a payment on an interest rate of over $400, I mean, you'd have to be much lower in the interest rate to get to that. And then Michelle, if you want to go back one slide, I did do one with the permanent buy down to show what a payment would look like if you were to buy a full point. Now in this scenario, the reduction, I did 1 point in this scenario just for the sake of easy math. It was actually a little bit less than that to get to that lower rate. So if you did have a point on this loan, I'd actually be giving you a lender credit as well as the permanent buy down. So that's a real thing too. So same scenario on the left, with your 30-year fixed at current market rates. And on the right, if we were to apply a full point to the loan, you would be able to get down into the 5s today. And in reality, it was actually a little bit closer to the 5.875, but just wanted to keep it easy math. And so here you can see on the permanent buy down, the savings each month is $157.24. So over the first year, it's still a very significant savings, almost $1,900 on a permanent buy down. And the longer that somebody is in that loan, if there is a thought process that the rates might not come down, that we've kind of settled into the new, whatever it's going to be, this is something that somebody who wants that confidence for long term might look into doing. The longer they stay in that loan, then the more money they're going to save. In this case, over $150 a month. And Greg, you had brought it up before the call, the turning point on these loans, and a good loan officer should go over this with their client as far as when they will break even and start realizing actual savings. In a case like this, it was a 40-month turnaround time. So the real savings is there on the left, $62.99 divided by your savings each month gives you 40 months, which would be a 3.3-year break even. Prior to 21, when we had the big refi boom, 3 years was actually the average that most first-time homebuyers would stay in their loan. So it is kind of right in line with when they might be looking to refinance down the road. And again, on something like this, if a seller were to pick up 1 point on a loan like this, it would be much less. And that can be very attractive to a buyer to think that they can buy down the interest rate and to get into the 5s. The other beauty of that is if they do get into the 5s, or when they get into the 5s, they are able to stay in that loan a lot longer because the rates have to go down that much further in order to benefit them. So in many cases, it's going to provide them some longevity in that payment and some consistency in the payment, something that they can then budget and prepare for down the road when they can refinance and then start saving more money. Mm-hmm. And go ahead, Marie.
Okay. You mentioned the 3-2-1 buy down, or, over 3 years. How much is something like that typically?
So they are case by case because it's right to the loan amount and the current interest rates. The math, I can give you the formula, and always happy to connect with anyone that has questions about this. But you would take the 3-year % reduction times 12, and then a 2% reduction times 12, and then the 1% reduction times 12. And you would add all that up, and that would be the amount of money that you would want to set aside for a 3-2-1 buy down. So we did see a few of those when rates did first start to increase a few years ago. Then we saw more of the 2-1s. And now, of course, we're giving the 1 year buy down away for free. But we do still see a 2-year buy down quite frequently. So then that math is just 2-year difference in the rate, 2% difference in the rate, 1% difference in the rate. You add it up, and that's how much your buy down is.
And I just want to add on here because people will be watching this, but Kim mentioned this at the boot camp back in August. And I was so intrigued that I've been working with Kim on this stuff over the last couple months. And I'm happy to say we got an accepted offer from my buyer last week, right, Kim? And she did do a 1%, Rocket does the 1% buy down for the 1 year. And then we negotiated getting the seller to pay the 1% permanent buy down. So it's like the piggyback. And my buyer is ecstatic to be able to have that really low rate permanently. So that it really worked out well when we were negotiating. And it was on a property that had been on the market for a while. So you have to watch, I don't think you would be able to convince the seller to pay for it in the first week it's on the market. But if it's been on the market more than a couple of weeks, it's definitely worth giving it a shot because it helps the buyer so much.
Well,
Thank
and
you,
Marie,
Marie,
to
for that.
Marie, to your point, the nice thing about that is we've all heard the term that inflation has been persistent. Well, I say in our business, the mortgage rates being high has been persistent. And if this gets rid of all of that, because now that your buyer with Kim's help is able to go and have 1%, 2% lower for the first year, but 1% lower going forward. And they're not having to worry about, well, geez, I better get out of this if the rates don't come down in 3 years, what's going to happen?
That's exactly what it was. Like she was nervous, and she was one who already owned but was selling. So she had a really low mortgage when she was with her current condo, and then I was trying to, the buy and sell option. It was nervous because she's like, oh my God, it's almost, mid sixes for the new mortgage. My payment's going to be so much higher. But we were able to keep it under 6%. I think it was like around 5% that first year, and then it was like under 5% for the rest of the time. So she's not worried about the rates having to come down for her to continue to afford it in the future. So, and for first-time homebuyers, I think this is amazing. We keep hearing that once rates get below 6, that's going to trigger the market, right? Well,
Yep.
she's allowed Rocket, anybody, but this 1% automatic buy down for that one. How long is that going to take place, Kim, by the way? Is there a cutoff when Rocket's going to stop doing that?
Well, they have not announced one.
Okay.
They're very,
amazing.
yeah, they're very communicative. So if they are going to end it, they will let us know, and we can send out information. They will usually let us know if something's ending, but they've been extending the promotions. We have other promotions as well that don't have to be first-time home buyers. So definitely check with me if your buyers need some help or if your sellers need help.
Kim,
Yeah.
you cover all 6 states in New England?
So I'm Maine, Mass, New Hampshire, Rhode Island, and then South Carolina and Florida, but our head office is in Connecticut. So I may get Connecticut, but even if I don't, I do have a colleague that I could refer it to. So I could still take care of them. Yeah, thank you.
Same with Vermont. You have colleagues that.
I do. Yeah. My team is licensed in all of New England.
Well, I think that's some good information that we're going to have to share with our sellers.
Well, and the other thing is the equity position today, the market hasn't really slowed down. There are really strong equity positions with some of these sellers, where, especially if the house has, not seen the activity that it had hoped to see, that you had hoped to see on the house, the buy downs are comparatively relatively low, and the equity position is there. So the net proceeds can be used for it. It's not something, you know, that has to be so much out of somebody's pocket anymore.
Well, thank you so much, Kim, for joining us today and sharing a little bit about buy downs. I don't know if a lot of us have used buy downs very much, so the information that we're getting is, um, makes sense that it's timely and it's important, especially with how the market is changing. And I do also want to give a shout out to Cheryl DiGeronimo, who's on the line. She's a past president, and Darlene Sedano as well. And I think Kurt is doing some kind of AI read, so he's out there somewhere too. But again, thank you so much, Kim. I don't know if anyone else has any
Thank
last
you.
questions. If you get a chance, make sure you sign up for Celebration. That's going to be coming up in March, and there's a early bird discount as of now. And we're looking forward for those of us that are going to Houston to getting together then and sharing ideas and just catching up with everyone and seeing each other. So thanks everyone so much. And to Greg, did you want to say something?
I had one question for Kim. Kim, can I share these slides with all of our members on our Facebook page when we repost?
That is a great question. Let me just run them through compliance because it does present a scenario, and we
Yep.
want to make sure that that's not being presented as an offer to lend.
Super.
Yay, compliance. So let me just run it through compliance, and if I get the okay, I'm more than happy to share.
Yeah, that'd be great. And bare minimum, I'll just take that one slide with your contact info.
Okay, that you can definitely share with
Awesome.
anyone.
All
Awesome.
right. Thanks so much,
thank you.
everyone.
Thank you,
Have
Kim.
have
Thank
a
you
great rest of
all.
October.
Have a great day.
Okay,
right.
bye-bye.
Bye
Bye.
now.